Testing the audio real quick, guys. Testing, 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 letting it catch my voice. And I think we're good to go. So, different video than usual. No post trading analysis. I just uploaded one of today. We're going to get into Bitcoin's price action. And what we're actually going to do is we're going to predict and give the best estimates that we can get of where the top of the cycle is going to be from a time perspective and a price perspective, and also where the bottom of the bear market is going to be, the upcoming bear market, a time perspective and a price perspective. And we're going to use statistics only. The most simple statistics that there are. You guys know that I love to keep my trading simple, while I also love to keep my spot trading simple and my predictions on the future. I'm not going to use any indicators because those are bullshit. I'm just going to say it there. I'm so sorry if I hurt your feelings. I'm not. Okay? We're not going to use any dumbass indicator. Statistics only. And you can see them here on my map. I have two time statistics, one map about summer, and then the prediction. Okay? And we're going to keep it very simple, but yet very effective. So I'll give you guys the time statistics first, and then we'll come to the conclusion and the prediction in the end. Okay? Pay close attention, please, because I don't want to hear any more messages of, oh no, the bear market's in triple top. Nah. Grab some balls, invest some money, and hold until you have to sell. And do your research. And don't just FOMO in when prices are high. Buy when the fear is the highest. Okay? That's how you make money. Okay. Enough enough of me being mean. Okay. First, let's actually get into this one first. So, this may seem overwhelming, okay? May seem very overwhelming, but we're going to break it down. So what I did is this time statistics is I'm going to look and predict Bitcoin's price action by looking at the cycles from two perspectives. We're going to look at the cycles from a halving perspective, and we're going to look at the cycles from a bull and bear market perspective. So the top of the bull market and the bottom of the bear market, and then the timing between, stuff like that. So this is coming down to the cycles, okay, the halving. Um, I think I said Bitcoin halving. So just to clarify, I don't remember if I said it. One is going to be looking at the Bitcoin halving and the cycles around the Bitcoin halving, and the other is going to be around the bull and bear market. How long did the bull market last from bottom to top, etc. Okay. So this first folder is all about the cycles around the Bitcoin halving. So in these black vertical lines, straight black vertical lines, we can see the dates of the Bitcoin halving starting the 26th of November 2012. Okay. And then the next halving is the 8th of July 2016. And then the next halving is May 2020. And then the next halving is the one that we just had. Okay. So zooming in on the Bitcoin halving. What happened after the first Bitcoin halving? So what I did is I'm not gonna zoom in all the way, but I my starting point is the daily candle close of the Bitcoin halving. Okay, so looking at the daily candle close of the day of the Bitcoin halving all the way to the top, what can we see? Well, we can see that um, price went up 9,417.18% from the day of the halving towards the high of the bull market. Now, what else can we see? Well, we can also see that here in big, the time that it took for Bitcoin to reach its all-time high after the halving was 369 days. Okay? And then the time that it took to put in a bottom, yeah, from the peak of the bull market all the way to the bottom of the bear market was 409 days. And then from the bottom of the bear market up towards the day of the halving, it took 542 days. That's kind of the cycle that repeats every single time. Okay. So to conclude it, on the first Bitcoin halving, okay, price went up 9,417.18% to the first all-time high of the first cycle. To reach the all-time high, that took 369 days. Then we had a bear market that lasted 409 days, and then it took 542 days until the next halving. Okay. Then the second halving, Bitcoin went up in price a total of 2,935%. Okay. That took Bitcoin 525 days. So it is an increase in time comparing it to the first halving, okay? Which is kind of normal to see it kind of increase in price or hover around that level, because this was so early and early stages that is more explosive, okay? But just keeping towards the fact or towards the statistics is that the day of the halving, it went up 2,935.91%, and that took 525 days. And then the bear market lasted 365 days. And then from the bottom of the bear market up towards the next halving, it took 511 days. And now we can kind of see already some similarities, right? So we see an increase of bull market time. But if you compare the rest, 409 days towards the bottom of the bear market, 365 days towards the bottom of the bear market, that's very close. And then look at this, 542 days until the next halving, 511 days until the next halving. So we're now that the cycle and the halving happened twice, we can already see some similarities exist, you know? So we have a bull market of around 500 days, a bear market of around 365 days, and it takes around 500 plus days to reach the next halving. Let's compare it to the third cycle that we had. So again, from the close and the day of the halving towards the all-time high, we went up 704.95%, and it took us 549 days. The bear market lasted 377 days, and it took us 514 days until the next halving event. Does this look familiar, guys? Because to me it does. Again, a bull market lasting around 500 plus days, the same way it did it here and the same way it did it here again. The bear market lasting around 365 plus days, 377, very close to 365, very close to 409. And then look at the time it took off the bottom of the bear market up and towards the halving, 514 days, 511 days, 542 days, all very close, okay? All very, very close. And this is all just in the chart. You just have to put the time in to do the statistics on it, right? So what I did here is I took the averages, okay? If we're looking at this 480 days, what is this 480 days? Well, this 480 days is an average of the time the bull market lasted, okay? Grabbing this 369, 369 days, 525 days, 550 days. And what we can also see that each bull market is increasing in time, okay? Each bull market is increasing in time span because we're also expecting diminishing returns, which is something I'm going to get into. But for now, because we're going to look at it from two time perspectives, I just took the average, okay? But you have to note that the bull market is increasing in time. Okay? So this 480 days is an average of 549 plus 525 plus 369 divided by 3. Then you get 480. Then what is this 130%? Well, we're expecting diminishing returns each cycle. So this was 94,000. This was a 94x. This was a 30x. This is a 7x. I did the calculations. You can do them yourself by comparing these diminishing returns. And if you look at it from a halving perspective, the next number, if you follow this row of numbers, is going to be 130.29. Probably 130.3. I just couldn't get the exact number on the screen. Okay? But around 130. Note that I took these from the candle close of the day of the halving. So now we went up quite a lot of the day of the halving, right? So 130% from a price point of around 65K brings us towards a 147K Bitcoin. Okay? Just looking at the prices of the halving and diminishing returns from a halving standpoint. Okay, very simple. Then where does this 383 days comes from? Again, I took the average, okay, of each bear market. So this bear market was 377 days. This one was 365 days. This one was 409 days. Count these up, divide them by 3, you get 383. Okay, now I put 2 lines there, meaning that if you just look at the halving cycle, price could come up, come up, come up, reach its all-time high right here, and then dump from there, and then reach the bottom right here. And then you have your drawing, your prediction. Okay? Just looking at it from the halving standpoint. So from the halving standpoint, you would expect a all-time high to reach around August 2025, around a 140 to 50K Bitcoin, and then the bear market bottom would be around 48K in August 2026. That's why I put these 2 dots, okay? The high and the low, the peak of the bull market, and then the bottom of the bear market. Just looking at the statistics in the chart, I'm not using any indicators, okay? Just looking at the statistics in the charts, grabbing the average, and knowing that there are diminishing returns over time, okay? That's looking at it from one perspective, the halving perspective. But let's look at it from 2 perspectives to get a more clear idea of bull and bear markets. This was the halving. Now we're going to get into the bull and bear markets from top to bottom, looking at it from a price point and a time point. Okay? Very simple. What I did is I did not incorporate any of this price action in my analysis from bull and bear market, even though this pullback is probably around 80 to 70%, because Bitcoin was very volatile and it was at such low price levels and so low liquidity that the moves were very aggressive, right? But this is the first peak that we put in after the halving. So that's why I want to incorporate all the price action and the clear retrace after the time we had that halving. Okay, this is just nothing yet. This is a bear market of like one, or a pullback of like 100 days. That's going to mess up everything else. So we're just going to look at this price action from one move up, where just because it had such low liquidity, that the moves up can have massive pullbacks, until it got more attention and we got more defined price action. So the peak of the first bull market was the 30th of November, 2013. Okay. The bottom of the first bear market, which is the red line right here, was the 13th of January 2015. Now we can look at some stats, okay? Because then, let's add one more statistic. The peak of the second bull run, okay, was the 15th of December 2017. And then what did I do? Well, I measured the move down from top to bottom, and the first bear market gave us a rejection of 86.9%. And the bear market lasted 409 days. This is also what I said in the previous statistic area of halvings. Okay, it was also 409 days. Then if we measure the returns from peak to peak, okay, so from peak to peak of the peak of the bull market of 2013 towards the peak of the bull market in 2017, the increase from peak to peak is a percentage of 1,590.97%. Okay? So the first bull market towards the second bull market, the first bull market we had or the first bear market, I would say, or I should say, had a rejection of 86.9%, and the bear market lasted 409 days. And from peak to peak, the return was 1,590%. Okay. The second bull cycle. Oh, and as you should also note, is that I used time and price in this one. So you can also see the dates. So from peak to peak is 1,476 days with a percentage of 1,590.97%. That's a very important add, which I just realized, so also pay close attention to that. From peak to peak, it lasted 1,476 days, and the increase was 1,590.97. Second bull market, or bear market, I should say, we had a correction of 84.06%, which lasted 365 days. I'm missing 3 days here, probably one line is missing because the previous one was also 365 days, but you get the point. And then from peak to peak, we had an increase of 250.86%, and it lasted 1,425 days. Hey, that seems familiar, that 1,425 days. It's very, very, very close towards the 1,476 mark. So the time from peak to peak is very similar. And we can see the diminishing returns, 1,590 towards 250. Okay. So what did I do here? Oh, and then the bear market, don't forget, the bear market lasted 377 days, and we had a correction of 77.57%. Just looking at the stats, guys. That's the only thing I'm doing. So what I did right here, I predicted, okay, just looking at the time between peak to peak, we had 1,476 days and 1,425 days. You count these up, you divide them by 2, you get the average is 1,452 days. So that's why I put this black line. From this peak, 1,452 days later, which brings us at October, the 31st of October, 2025. And then I calculated the diminishing returns that we were getting. So we were getting 1,590%, and then we were getting 250%. If you do the math from a diminishing return perspective, you get around 40% this time. Okay? So adding 40% from this peak towards that peak at the 31st of October 2025, we get this blue box. Okay? And I put a dot at the exact timestamp where price and time crosses. Then also looking at the bear market, which I did, also in the previous one, I added these 409, 362, and 377. I divided them by 3, which brings us at 383 days. And then from the correction perspective, I did not grab the average because the same way that we are getting diminishing returns over time, the corrections are also diminishing. So we went from 87 to 84 to 77. And if you do the math from correction to correction to correction, and you use good math, this is around 67%. Okay. So again, adding the average duration of a bear market with a line right here, the red line, and then how much of a percentage we're going to drop from the top down of the top that we just discussed, we have these two dots here. The peak of the bull market from a top to bottom perspective, and the bottom of the bear market from a top to bottom perspective. And you will get these two dots. So if you look at it from these statistics, you can say that, okay, we can come up, put our high in and then dump down, and at the bottom of the bear market is going to be at this dot, and then we have sideways price action and we go up again. Okay? Just looking at pure statistics that are visible right in front of your eyes, right here. So now we have looked at it from two POVs. Bull or pure bull bear market, and the time from peak to peak and the time from peak to bottom, and from a halving perspective. And that brings us with two dots on each one. These two green dots and these two green dots. So what I did is I put them on the chart for you guys. That's how sweet I am, giving you the pure facts. So if you combine the statistics and the estimations that we just calculated from both POVs, is going to give us a box to sell and a box to buy. So looking at the statistics, you would expect a bull market to end between the 11th of August 2025 and the 31st of October 2025 with price levels between 95,000 and 146,000. And you would expect a bottom of the bear market to be in the 26th of August 2026 of a price point of 50 or 48.6K until the 18th of November 2026 with a bottom price of 31K. Which actually, if you use smart money concepts, is just simply this range demand right here that could give us the bounce, or this range demand right here that could give us the bottom. Which is perfect because now time and price statistics line up with demand, because these are areas of demand where price could bounce. These are support levels, okay? So it's just beautiful. Everything aligns, okay? Everything aligns. So these are the hard facts. Now, everybody is stressing about this tiny little pullback / consolidation that we're getting. So listen closely. If I pull up again the halvings on my chart, what is one difference that we have now regarding the halving that we did not have before at any halving? It is that Bitcoin reached a new all-time high before the halving. If we just look at any previous halving that I put on the chart here, look what happened after the halving. The halving came, straight shot up. That's simple. Halving came, tiny pullback, straight shot up. Halving came, straight shot up. Because every time this halving came, we did not reach the previous all-time high. So after the halving, most of the time, we just shoot up. This time, it's a bit different. We reached an all-time high before the halving took place. So what is a rational thought that you can have right now in your mind that every time that Bitcoin reached a halving point, we just shot up completely. But every time we just shot up completely, we did not reach the previous all-time high yet. But now we already reached the previous all-time high. So what makes sense? Maybe instead of a straight shot up, we have a bit more time, a bit more consolidation, a bit more of a retrace after the halving before we have that massive move up. Okay? That just makes sense. Because look at the time spent between or below these blue boxes here. Because that when the halving happened. Right here, the halving happened, there was 0 time below this blue box. 0. Okay? When this halving happened, we had our pullback. So this is time spent below the blue box before we had the massive shoot up. The last halving event. What did we have? 0 time below the blue box. And all these times, Bitcoin did not reach an all-time high or did not reach the previous all-time high before the halving. But now we did. We reached the previous all-time high before the halving. So maybe what makes sense is we spend a little bit more time below the blue box before we shoot up. And to further rationalize this idea that I'm playing out or laying out for you guys here, that maybe because we reached an all-time high before the halving, meaning we had too much bullish price action before the halving, maybe we need to cool down or cool off for a bit longer before we have that next leg up. Okay? So to further rationalize this idea, I was looking at summer. I was just looking at summer. What did the summer look like after the halving? Because summer is about to come. So what did the previous 2 summers after the halving look like? So maybe we can expect, or maybe they can give us an idea of what this time is going to be. So, looking at the summer after the halving event, and summer, how did I describe summer? I did summer for me in this situation is June, July, August. Those 3 months I took as summer. Okay. Well, what do you guys see here? Price opened right here. Price closed right here. Nothing happened. Okay. Nothing. Absolutely nothing. The summer after the halving, nothing happened. We went up, we went down, and we closed at the exact same price level. Okay? Remember that. Nothing happened. What happened the second time we had a summer after the halving? Price opened right here, price closed right here. Again, grabbing June and September. Opening price, closing price. What happened? Nothing happened, guys. Nothing. Yes, we went down, we went up, and we went down again. But in the end, nothing happened. Okay? Summer started around 10K, summer finished around 10K. We had to move down, we had to move up, we had to move down. But nothing happened. Absolutely nothing happened. Okay, so knowing that this time we reached an all time high before the halving, and we could maybe cool off for a bit longer, and we're heading into summer, and normally during summer nothing happens. Well, now I put summer on the chart again, June to September. Okay, it's this area. What could potentially happen? What could maybe happen? Well, maybe we go down and we open here and we range for a bit longer. I don't know. Maybe we do something like this. We head into summer and we have a massive move up and then move down again. The only thing that I can tell you is the last two times nothing happened. If we just look at the open price and the close price of the start of summer and the end of summer. Okay? So let's say we enter summer right here. There's a big chance we close summer right there. What happened in the meantime is just to trap more people. That's it. Okay? And we could easily, this box, yeah, I just put this box here because I put the high and the low where we are right now. But you can move this box down. You know that, right? It just depends on where we are when we head into summer. Just know that the opening price of summer and the closing price after the halving in 2 summers twice. Okay? Those are just the statistics, those are just the facts. So combining everything, I'm pulling out our drawing too, because that's what you guys want, right? Just a drawing on a chart, and then you believe me. Okay. I've given you all the statistics now. What can we expect right now? Okay? Just to prepare your little mind and you don't get stressed out and you don't sell all your crypto and then you buy back higher and Bitcoin is an all-time high and then you never sell because you think we're going to 200K and oh no, this is an ETF, so now it's going to be a super cycle because trust me, the big boys will never sell, though they will just keep on buying because they're so used to crypto price action. Because a Bitcoin ETF is not new at all, and all these rich motherfuckers have just been or are used to 50% plus in stocks and then they make trillions of dollars. No, if Bitcoin this time does it 200% or 100%, they are never going to sell. No, we have Bitcoin ETF inflows, we have Hong Kong ETF inflows, we have BlackRock buying, we have JP Morgan buying. This time is going to be different. We have a super cycle. We're going to 1 million. It's going to last forever. We're never getting a bear market again. For all these people that think this and are going to think this in the future, I'm going to laugh you in your face because I put this video out on the 30th of April, 2024. Okay? Every cycle has been the same so far. And every cycle, there was a reason for it to be a super cycle. And it has never been that way. So it's probably not going to happen this time. We have to think rationally. Don't think with your emotions. Look at the facts and trade based on the facts. Okay? So, ah, what can we expect? Let me use my marker structure. I think no, I want to use my drawing too, but I want to make it black. Okay, and I want to make it thin. So, what can we expect? We go down. Okay, maybe that's a bit too much. We go down. We go up. We enter summer. Should use this one. This is annoying me. Okay. we go down, we come up, we bump. I need to become a better drawer. Okay, second try. Maybe we go down, we come up, we range. Nothing really happens in summer. Summer's over. We push up, pull back, push up. FOMO appears, pull back. Everyone gets stressed again. Oh, bull market is over. No, consolidation, pump, pump, pump. Breaks are getting less. And we dump. Oh no, this is just a pullback. And we dump. Oh no, I'm gonna buy more. And we dump. I'm gonna buy my whole house and sell my whole house to buy more. And we dump. And we dump hard and hard until we reach this area. And we find resist. And yeah, okay. So, I'm not saying this is gonna happen because I cannot predict what's gonna happen in the meantime, you know. Just know, let me put this in the prediction box as well. Not even in the prediction box. Let's make this our own box. Let's call it drawing, right? Let's call it drawing. Just know, if I get rid of drawing right now, the price is most likely going to stay the same. Not even in this box. This box is nothing, guys. It's just going to be a time. Don't look at this from a price perspective. Look at it from a time perspective, okay? Because that's going to be summer, and most likely not that much is going to happen in summer. So, no price action in summer, massive pump with a few dips. We reached the all-time high. We broke Mark back to bearish. All the people are going to keep on buying the dip, and then we just dump on them. We range, we dump on them, we find the bottom, and then we consolidate, and then that's it. And then we hit higher again. Okay? Where every pullback right here is going to be long the dip, and then one pullback is going to be a bit bigger, around the 100K area probably, and people think the top is going to be in, and they're going to sell everything, and the price has a one last push up, and they're going to FOMO back inside right here, and that's when we're going to dump, and then they're going to keep on longing the dip, and then the long the dip mode is going to kill them until they lose everything, and they have no gains, zero. Okay? So, sorry for my yelling. I apologize. But I gave you all the facts, and I gave you all the statistics, and I gave you my thought process. And in my opinion, I was being very honest and not biased at all. So do whatever with it, whatever you want to do. Just know, if I get signs of bearish price action in this box, I'm selling. And if I get signs of bullish price action in that box, I'm buying. See you guys. Peace.